ADP October jobs numbers for the private sector up 233,000. That's against a forecast of just 113,000. Service, good sector up 22,000. The service sector 211,000. Now there's the non-farm payroll estimate for Friday, which is government and private sector at 100, and I don't know what the street does with that. By the way, the ADP was revised up 16,000 from 143 to 159, so closer. But last month they still were potentially underneath. So I don't know if this is potentially catch up. But we have Nela Richardson here. We'll talk to her in just a second. I'll give you a little more of the data here. The jobs were substantially in large businesses. Small was up just 4,000. Medium, that's 50 to 499 workers, up 86,000. There's large business up 140,000. And where were the jobs? Where the places where they've been? Education and health services up 53. Trade, transport, and utilities up 51. Leisure, hospitality up 37. Construction doing well. Professional business services doing well. The only decline in any sector was manufacturing, down 19,000. And now, as promised, as advertised, as promoted, you want to talk about?
Well, just before we get to
okay.
A lot of questions for her, but I'd like to see, the futures haven't moved a whole lot. I'd like to see what yields are doing in the Treasury market, because this morning, Steve, you told us that the only thing that's going to put pressure on yields at this point is weaker economic data. This is certainly not that. And 425, sure enough, is the 10-year. Earlier this morning, I think we were at 422, 421 when we checked, so a little bit higher.
Yeah, it's a little bit higher. But here's the wage data, Becky, which again is taken from millions of actual paychecks, up 4.6%. That is down a tenth from the prior month. And that's job stayers, people staying at their job. And then going over to job changers, that's 6.2%. You would expect that to be higher, but that is also down 0.4% from the prior month. Now, I think we want to... Oh, it's Andrew's job to introduce Nela.
I can do that, but you can do it. You're right there.
I almost did it.
You can do it.
Okay, ladies and gentlemen, let's bring in Nela Richardson.
There she is.
Chief economist at ADP, the person who puts all this together.
These numbers
the one responsible for revamping it. I will tell you,
how long have you had to know these numbers in your head?
I'm still constantly remembering them, so I'm ready with the numbers. But luckily, I have Steve here.
I want to tell you, though, you probably know this already, your plus or minus absolute difference over the past 3 months is 29,000 with the payroll numbers. I know you don't even like that to happen because you're saying you're not predicting it. You're giving your own different estimate. First question, how do you treat strikers?
So as long as a worker, and by the way, good morning, I'm thrilled to be here in person. As long as the worker is on payroll, we count them. So whether they got paid or not, they're still counted in our data set.
How does the government count strikers?
They count the number of people who received a paycheck. So if you work an hour or 40 hours, it makes no difference.
So if the strikers did not receive a paycheck, they may not be counted in the government.
That's right.
And you do it because they're still on payroll.
They're still on
They show up in the computer as being an employee of the company.
They're still an employee.
So that could be a difference, plus or minus 30,000
right.
between it. How about the hurricane? What did you see in terms of the hurricane?
So we saw a quick effect in terms of the number of people who got paid. So we have two types of data. What we report are people on active payroll, but we still have paychecks. We still know who got paid during that week.
Right.
And during the reference week, which is when Hurricane Milton touched base, the reference week is the week we count in terms of the jobs numbers. We saw a 7% dip in both North Carolina and in Florida of workers who received a paycheck. That next week, the week of October 20th, it rebounded. So yes, there was an effect, but it was short-lived.
But that did not show up in your data because they were still on payroll. However,
exactly.
They may not show up. So this is fascinating, and let me tell you why. Because the whole game with the Friday number is looking through the distortions to understand the underlying strength.
That's right.
What you're saying is there's a lot of underlying strength if these people were not fired.
That's right.
And that we should really look through a low number because it's strikes and it's hurricanes, and that the number is maybe more in line with what you're saying.
I think so. We expected a cloudy, messy October for a variety of reasons, but two of which you've just outlined. But what the ADP data does is make that clear. We know who's on payroll, right? And it rhymes with other data like the initial jobless claims that also saw a peak up and then a dip down subsequent to the hurricane's landing.
So does the Fed realize that and pay attention to these other numbers instead? And I'll ask that of both of you.
I think the Fed is paying attention to a lot of economic data. You can't be data dependent for 3-4 years and not see the whole scope, both private sector and public sector data. So yes, this is probably an input along with other inputs of how the Fed is making their decisions. And if they look at the grand scope of data, they're seeing a broadly resilient economy, especially in October.
Nela, we have to wrap because we're going to break for more numbers. But here's a question. What about the wage data? The wage data seems to be coming down. The Fed has said it does not see the job market as a source of inflation. Is that your read from these numbers?
For an inflation watchers, this is the most important point. The economy is having its cake and eating it too. It's creating all of these jobs while at the same time wage growth is coming down, and that's good news for inflation. So we're really in a sweet spot in October. I don't know how long it lasts, but I'll take it this month.
This number today is going to be a big factor in thinking about understanding the number on Friday.
Sure.
And I know people dismiss the ADP number because it may or may not correlate. It may not be helpful to them in their models. But this is something that you have to consider.